Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Looking at the Australian dollar, an interesting roundup for the week as the market did regain momentum from hitting a fresh low of 73.70. And as you can see from the rally, the market was mainly on the fact of the disappointing US non-farm payrolls. After missing expectations to the consensus at 185k, the data reported came in at 138k, much lower than traders may have anticipated. However, the US unemployment rate did come in slightly lower at 4.3, with the forecast coming in at 4.4. Now, looking into this week, we do have a massive week of data, with the RBA monetary policy decision on Tuesday, and then we have further figures out in the Australian sector coming out with the Q1 GDP on Wednesday, and also we have today the China's Asian PMI and also CPI later out in the week. So with the RBA and also with the Chinese figures, do keep a close watch to the market, purely for the fact is that I am expecting to see any advances beyond 74.50 to fail and look towards immediate target of 73.85, with the objective still holding towards that 73.15.40 level. Any advances beyond 74.50 should find further selling interest or supply coming in around that 75.15.25 handle. Now, as I mentioned, looking at the technical outlook with the negative display, I do expect to see the market sway first of all towards 73.85, and do keep a note with the RBA, as it does expect to see rates hold at the historic lows of 1.5%. Now, a little bit concerning with the euro, as the market rallied very hard on Friday to a high that we haven't looked at since the last 6 months. Now, with the US taking a crippling blow due to the disappointing US non-farm payrolls, the dollar index is now reaching a low of 96.56, just away from that level of 95.85, where President Trump was elected as the 45th president on November the 8th. Now, I do expect to see further rounds of weakness to the US dollar for the start of this week. But caution on the euro, purely for the fact is that we do have the ECB rate decision this week, and also to note that the recent weaker than expected inflation come out also last week could actually see the handle holding around that 112.80 figure level and look back towards the downside. Now, the key to the downside to get the bearish implications back into play is beneath 111.70. A break there would give further scope towards a target of 110.70.90 and reassess from there. Well, dollar yen still displaying a lot of weakness after depreciating nearly one big figure on Friday due to the back of the disappointing US non-farm payrolls in May. A couple of things to note. First of all, if we go beneath 110.05.10, this would give further exposure to the downside to a target of 108.80 to 108 figure 35, where I've highlighted here before seeing further rounds of strength and taking the market possibly for a recovery. I'm not overly bearish at this stage due to the fact the way the indicators are set up, and this would be as just a stop loss move if the bulls do not defend or fail to defend this 110.05.10 level. Looking towards the top side, a break above 110.90 would give further exposure towards 111.65.75. Now, sterling, with a lot of risk potential this week, could see a good two-way whipsaw price action within a 127.10 to a 130.60 band. However, the resistance over the last 4 days has held relatively well, 129.20.30. Now, a break beneath 128.35 would give further scope to the downside and bring in a target of 127.10. So with the race to Downing Street, the Conservatives are still leading against Labour. However, Theresa May is still suffering from bad approval ratings. according to two polls that are seeing further seats diminishing in the coming up election on June the 8th. So, as I mentioned, it's likely to be a very whipsaw price action, and until we get the UK election out of the way and start the Brexit divorce, we could continue to see this price pattern, and very hard to actually try and determine an intraday stage, but playing with the broader bands, as I mentioned, of 127.10 to 130.60. Now, if we look at gold, the market did rally very hard on Friday and took out the 12.79 resistance and pushed up to a high this morning of 81. That being said, I'm a little bit cautious with the technicals still overbought, and although we could see highs around 85 to even high as 94, I'm not bullish up here. I feel the market will eventually foul and look back towards 76. Only a break beneath 68 would give further implications to the downside, so we could see a temporary base around that 68, 76 in the short term. And to wrap up with oil, the market exceeded its target of 47.15 on Friday after printing a low of $46.83. From the recovery, I still believe, should I say, that the oil analyst across the globe still remains downbeat and could actually see further weakness to a potential target of $45 and reassess from there. Any advances on the day should find a cap around 49.5. So that wraps up my daily video. Thank you very much for joining me. I hope you have a great start to the week, and also look out for the intraday report that will be released shortly.